Well, hello everyone and welcome to Reflections 2020, a very special StockCharts TV event here, a year in review, our year-end wrap-up. We've got so many interesting segments and so many interesting analysts bringing you their technical perspectives on the market, talking about process, talking about sector rotation and top technical events. So many things happening with this year in review segment. I am honored to be a part of it. So excited to dive into one of my top technical events of 2020. Of course, if you don't know me, my name is Grayson Roze. I'm the Vice President of Operations here at StockCharts.com, as well as the author of Trading for Dummies and Tensile Trading, the 10 Essential Stages of Stock Market Mastery. It's going to be a fun one here. We got some interesting charts to dive into. Of course, 2020 has been a fascinating year in the markets. So much happening, so much uncertainty, so much volatility, but so much outperformance by some really interesting sectors, industry groups, individual stocks, so many wild things happening. So we're going to dive into the charts right now, and I'm going to talk to you about what I think is one of the most important technical events of 2020. When I think about things that stick out to me this year, things that have happened that have really caught my attention, this is the one I go to. So my top technical event for 2020 is kind of a combination of two things. It's the leadership of growth and the resilience of offense. We've seen some fascinating things happen this year in the markets. Obviously, like I mentioned, a very, very volatile one. When we had the big COVID hit earlier this year, bouncing there from February all the way down to the March 23rd lows in the major indexes. Big pullback in the market. Big, drop, something that we haven't seen a lot in the last couple of years. We've had this very resilient bull run to the upside. So our first bear market in a long time. But through that, what we saw was some really interesting things actually outperform. Now, we saw a lot of things get hit and move lower, move to the downside. But it's really the outperformance of some key sectors in the market and some key industries in the market that caught my attention, specifically during that sort of collapse that we had. But then when we think, forward from there, think about what happened the rest of the year coming out of those lows that we saw in March. That's what we're going to take a look at here as well. So when I think of what's important this year, it's the leadership of growth, the resilience of offense, some of the more growth-oriented segments of the market, some of the more offensive corners of the market have really been what have shined this year, not only outperforming through the weak point in the market that we saw, February to March, but also coming out of that as well, turning into some of the top performing sectors and industries and individual names on this year in 2020. So first up, let's look at the classic growth versus value chart. This is going to be a ratio chart of the S&P 500 growth ETF, SPYG, versus the S&P 500 value, SPYV. Now, this is giving us a sense of the growth corner of the market versus the value corner of the market and how those two are performing relative to each other. So if growth is outperforming value, we're going to see this line going up. If the inverse is true, if value is outperforming growth, we're going to see this line moving lower. Now, what's interesting to note, this is a 5-year chart here created in ACP, our new interactive charting platform. And what I've done is I've highlighted actually 2020 specifically there in the sort of purple section. You can see it's pretty subtle, but it's over on the right side of the screen. I've highlighted 2020, the entire year so far, in that purple segment. I've highlighted the collapse, if we call it a collapse, from sort of late February to the March 23rd lows in that red bar. So the period where the market was really getting hammered to the downside, aggressively moving lower, we can see this ratio during that period and what it did. Now, again, this is a 5-year chart, so we're looking at a little bit longer view, but what that 5-year view gives us is a great picture of how aggressively growth has outperformed value this year. We have seen massive leadership in growth, specifically over value. We've seen growth outperforming the S&P 500, moving higher overall, but specifically, it's when we look at growth versus value that the leadership of growth really becomes so clear. Now, we have given back some of that in the last couple of months, but when I look at sort of what we've done in the last couple of months as value has kind of come back into play a little bit, this doesn't really seem like value taking over. It seems like value catching a tiny little breather after so many months of dramatic underperformance. So when we're specifically looking at growth versus value, the clear outperformance of growth this year really stands out to me. And specifically, again, looking at that kind of red bar, when the market was really getting hammered to the downside, what was working was growth. Growth was substantially leading value during that period, which was quite interesting to see. So overall, this really leans towards the leadership of growth theme that we're talking about today. But it also shows how things have been dramatically skewed towards that leadership of growth. Specifically, we look at kind of how things have moved over the last couple of years and how clear 2020 has been moving to the upside with this ratio. Now, next up, let's pull up a quick view here of the sectors. Now, these are the 11 S&P sectors, and what we're looking at here is a year-to-date view. So we're looking at performance from the start of the year up until now here in mid-December. What we can see is that the top 3 sectors that have led SPY, which is the S&P 500 itself, are technology, discretionary, and communication services. Now, a huge gain for technology for XLK, the technology sector ETF, 41, almost 42% up year to date, just a massive gain. We've also seen that reflected in QQQ and the NASDAQ 100, which is heavily weighted towards technology. Big gains coming out of technology this year, which has been interesting. We've seen that story continue now for many years, but to see it continue again through this year is pretty fascinating. We're going to dive into some of the charts to show you exactly why I think that's so important to reflect on. Also, consumer discretionary, though, a much more offensive corner of the market there, discretionary, and to see that with nearly a 30% gain is also quite interesting. Again, an offensive, sort of more growth-oriented corner of the market there that has been leading us. Communication services dominated by a lot of growth names as well. So it's interesting to see that one there with almost a 26% gain year to date as we stand here in the middle of December. And again, all of those outperforming SPY, the S&P 500 itself. We can see that here with a very healthy 17% gain. I mean, that is something that we never expected to see there in the middle of March. No one would have ever told you that we'd be back up, near new highs and putting in a 17% year-to-date gain. That's pretty wild to see. But it's really the corners of the market that have led us there that's so important to note. So when I think about this, I like to look at sort of offense versus defense in a couple of different ways. This is actually a chart that I look at every week. Now I've pulled this up here with our ACP tool, our new interactive advanced charting platform. You can create multi-chart layouts in ACP, and this is a great example of how those can be used. So in ACP, I've actually put 4 charts on the screen. I've got this layout here with a couple of key ratio charts that I like to watch every week that help me sort of assess whether the market is favoring offense or favoring defense. So we're going to dig into that right now. What you can see here, we'll start in the top left. This is XLY versus XLP. So this is consumer discretionary versus consumer staples. The reason that I like to look at this ratio, a lot of technicians do, is we call this the offense versus defense ratio. Consumer discretionary, a much more offensive sector. Consumer staples, a much more defensive sector. So typically, when we say that offense is leading, that's going to be represented in the consumer discretionary sector moving higher and outperforming the consumer staples sector. When we see that change, when we see that flip and staples starts to outperform discretionary, we like to say that that's more of a defensive favoring in the market. Well, you can see here in 2020, we've got 2020 started right here, this kind of vertical blue line. And so you can see that in 2020, we did take quite a hit there. Staples outperforming a bit in sort of the pullback that we saw. But overall this year, we've seen a huge run to the upside in this XLY-XLP ratio, which means that offense has been very clearly outperforming defense. This has been more of an offensive lean in the market. So when I say the resilience of offense, this is a great way to capture that. We see sort of a more offensive sector outperforming the more defensive sector in the S&P. Now, we can look at that though in a different flavor. A lot of people like to criticize this and say, well, it's a cap-weighted sectors, and so you're really kind of favoring the large cap names. A lot of people point to Amazon as a sort of a disruptive piece of this ratio because it is so large. So we can look at this actually in an equal weight flavor though. Instead of looking at the cap weighted sectors, we can actually look at the equal weighted sectors. And when we look at the equal weighted version of this same ratio, consumer discretionary versus consumer staples, that's what this purple line is looking at. So on an equal weight basis, we can see, which kind of, again, takes out the effect of the big cap, the mega cap players like Amazon. We can see that this has actually been still very, very clear favoring of offense, especially coming out of those March lows. We've seen offense on the equal weight view really, really firmly outpace staples moving to the upside. So again, the resilience of offense here reflected in two flavors. We've got the cap weighted flavor here in the blue line, but we also have the equal weighted flavor there with the equal weighted version of those sectors. Offense versus defense still really pushing higher, showing a lot of favoring of offense in this market. Now, two other ratios that I like to dig into to kind of go a little bit deeper into this offense versus defense positioning is XLK versus XLU, which is technology versus utilities, and then also biotech versus healthcare, which is a little bit different. We're not looking at sector versus sector there. We're actually looking at one specific industry group within a specific sector. So let's start here with the technology versus utilities. I like to look at this because it's an interesting look at sort of the modern world. In a lot of ways, the growth of technology, the way that so many companies have gone, technology, a lot of these data infrastructure kinds of companies, things like the cloud, in a lot of ways, those have actually become utilities for the modern world, right? You've got your cloud infrastructure and everything that sort of powers your technology company, powers your business. Even for companies like StockCharts, everything that powers our business up in the cloud, that really is kind of like plumbing for the modern world. It's sort of a utility for the modern world. So I like to look at this to see, again, kind of how are we positioning between utilities and technology. So what we've seen here is utilities, which is much more defensive traditionally as a sector versus technology, which is much more offensive as a sector. This ratio has been moving higher through 2020. We've seen technology just really trounce utilities to the upside, outperforming utilities very clearly. So again, another sort of look there at how offense has been leading in 2020. We did see that ratio start to roll over just a few months ago, but it's resumed its move to the upside, and really this was more of just kind of a reset after moving so much higher. So technology here outperforming utilities by 73% over the last 2 years is really interesting, but specifically when we think sort of from this point, from 2020 on, how utilities have really lagged technology. Again, another point there for offense really leading in 2020, which is interesting to see. Now, another corner that I like to look at, again, like I mentioned, a little bit different, an industry group here versus a sector. We're not looking at sector versus sector, but I personally like to look at XBI versus XLV. That's biotech as an industry versus the healthcare sector more broadly. Now, healthcare is interesting because there are some different sort of pieces to it. You've got the more offensive corner of it in something like biotech, but you have other corners of that healthcare sector that can lean a little bit more defensive. So when we see this though, again, starting from 2020, this kind of middle blue line here, we can see that XBI, biotech, has very clearly outperformed healthcare as a whole in 2020. So again, more of an offensive corner of that sector leading to the upside. We've seen quite a lot of interest in the growth of biotech. Obviously going through a global pandemic, sort of a health crisis, it makes a lot of sense. But to see this much more sort of growth-oriented and offensive corner of healthcare outperforming XLV, biotech outperforming XLV so clearly, that has been really interesting to see. So when we bring all these together, what it shows me is that there's a clear favoring of offense in this market. We have, again, discretionary outperforming staples, we have technology outperforming utilities, and we have biotech heavily leading healthcare. All of that to me points to a very offensive positioning in the market, sort of a favoring of offense in this market. Now, what we're going to look at next, though, is kind of how things happened, again, reflecting on 2020, how things happened, how things went during that major collapse that we had earlier in the year from February to March, about a month and a half there. What happened? What led? What underperformed? All of that. So again, when I think of the major technical event, the theme that I want to highlight here, it's the outperformance of growth, the resilience of offense what we saw in that period from sort of late February into late March 23rd lows, that's what this purple box represents. That's that period from the end of February to those March 23rd lows. And what we're looking at here is a couple of different things. We're going to look at a few different sectors and industry groups in this same view. In the top corner, again, this is all created in ACP multi-chart layouts. Another good example of how you can use those. But what I've put here is SPY, the S&P 500, in the top left corner. I've got the technology sector XLK in the top right corner. Pretty simple charts here, just looking at basic price action and a couple of moving averages. We've got the 20, the 50, the 100, that little dashed orange line, and then we have the 200 moving average. So pretty simple look at those different charts. But again, S&P 500, we have the technology sector, and then on the bottom chart we have a ratio chart looking at technology versus the S&P 500. So XLK versus SPY. So what we can see here, focusing on that big decline that we saw at the start of the year when the pandemic really got going, what we can see is that during that period, which I've highlighted with this purple square, technology very clearly outperformed the S&P 500. Now, even though it was still moving lower, very clearly moving lower, everything was taking quite a beating, we saw technology actually hold up much better than the S&P 500 itself. So what's so interesting about that is you have this very offensive sector of the market that was actually during a very sort of scary time when you thought a lot of people would rotate into more defensive corners. You actually saw technology outperforming the S&P 500. People would rather be in technology at that point than something like utilities, which was fascinating to see. So that clear outperformance during that slowdown of technology over the S&P 500 was something that I was watching carefully. I know a lot of other technicians were as well. And then we've seen that really continue. You know, we can pull this ratio chart forward and look at the rest of the year from there. This is a 1-year chart. So over the last 1 year, technology has outpaced the S&P 500 by almost 22%, which has been fascinating to see. But specifically, again, you know, highlighting what happened during that slowdown, seeing technology really firmly outpacing the S&P 500 was definitely something to watch and something to note as you reflect back on this year. Now, let's look at this in a couple of different sectors and industry groups as well, in addition to technology. Same view here, we're looking at consumer discretionary versus the S&P 500. So same view, again, we've got the S&P 500 here in the top left. We've got consumer discretionary, XLY, the consumer discretionary sector, in the top right. And what we can see is, again, that purple rectangle between sort of the end of February and the March 23rd lows. What happened? We actually saw consumer discretionary hold up pretty well. Now, it bounced around quite a lot more than technology. We did have some serious dips, but quite a rapid recovery there. And overall, through that period, we saw it be a little bit flat, and consumer discretionary actually outperforming the S&P 500 by just a little bit. So again, you know, people wanted to stay in consumer discretionary. The offensive side of consumer discretionary, or the offensive corner that the consumer discretionary represents, was actually favored during the slowdown that we saw, during the quite rapid decline that we saw in February and March. So it's interesting to see that again. Now, we can look at this in a couple of different ways. In addition to those two sectors, I've got technology and consumer discretionary, but if we dig in sort of one level deeper to the industry group level, let's look at semiconductors versus the S&P 500 during that year. Now, semiconductors have been a corner of the market that people have been talking a lot about this year as something that's been moving higher and heavily outperforming. But again, you know, that same concept, during the slowdown that we saw, during the big hit that we saw in February and March, we saw semiconductors actually outperform the S&P 500. Again, you know, a very growth-oriented offensive corner of the market was outperforming the S&P 500. Which really stood out to me on the charts. And again, we've seen that continue for the rest of this year. You know, very similar, obviously, to technology, similar story there. And obviously, those two are quite heavily related. But we've seen semiconductors outperform the S&P 500 overall, but specifically in that period from February to March, to see semiconductors, very offensive, growth-oriented corner of the market outperforming was fascinating. Now, let's go back to that XBI chart too. We can look at how that performed. You know, again, it is interesting to note that this was a global pandemic. We were looking at a health crisis, a global health crisis. And so to see biotech outperform makes a little bit of sense. But at the same time, it is a very, very offensive, sort of more risk-on sector or industry group within the market, corner of the market. And so when we look again, this is an industry group that has outperformed heavily this year. Over the last year, outperforming the S&P 500 by 28%, as you can see here. Great chart, moving higher, making new highs, all of that good stuff. But again, in that purple rectangle, we can see clear outperformance during this period, bouncing around a bit, but still clear outperformance overall throughout that period. So biotech holding up a little bit better than the S&P 500 during that decline, along with semiconductors and consumer discretionary and technology. That really stood out to me, that again, sort of resilience of these offensive corners of the market. Now, when we think about kind of what's happened at the individual stock level, again, it's been these big growth names that have really led us higher and have been, continuing to make new highs day after day, week after week. Some of the biggest leaders in the market, when we look at groups like the S&P 500, the S&P 400, and the S&P 600, some of the biggest leaders I've put up on the screen here with this 6-chart layout. So actually what's interesting here is I picked a couple of names that were top year-to-date performers. The top row is going to be 2 charts from the S&P 500, which is obviously large caps. The middle row there with Enphase and Penn is going to be the S&P 400, 2 mid-cap names. And then the bottom row, Trupanion and Renewable Energy Group. Those are both components of the S&P 600, 2 small-cap names. So, it's interesting to see heavy outperformance by some of these names. And the point here is that they're all big growth stories, big growth stocks. It hasn't been value that's been leading this year. It's really been a lot of growth, a lot of sort of offensive individual names. We can look at it at the sector level, we can look at it at the industry group level, but we can also look at it at the individual stock level. What's been leading? It's been a lot of big growth names. Things like Etsy, things like PayPal, Penn National Gaming, a gaming stock that a lot of people have made a big deal about this year, outperforming VTI over the actually this is a year-to-date chart, so we can see outperforming VTI, which is the Vanguard total market, so the total U.S. stock market, outperforming by almost 195%. Just big gains in some of these names. Enphase outperforming by 367% over that. And Etsy, a bigger name here, an S&P 500 component, outperforming VTI by nearly 250%. Just a beautiful move in Etsy. PayPal, another big growth story that's continued to grow this year. So it's been really interesting to see some of these big growth names really hold up very well in a year when a lot of people thought that we'd see a lot of those names get crushed. So again, when I think about my theme for 2020, sort of my top technical event, it has been the growth of offense and the resilience of the resilience of offense and the strength of growth, the outperformance of growth. So, anyways, again, my name is Grayson Roze. It has been so fun to be with you here today for this special StockCharts TV year-end event. If any of this has resonated with you, if you want to keep in touch, if you want to follow any of my work in the markets, you can visit me at my personal website, stockmarketmastery.com. Sign up for our newsletter there, free newsletter. We just keep in touch with people through that newsletter when we're doing events and things are happening. You can also check out any of my books. Trading for Dummies was the most recent one, but also Tensile Trading. Lots of good stock charts tips in there as well. Talk about how I use stock charts in my process and my approach to the markets. And of course, you can always follow me on Twitter. I'm always posting stuff up there, charts and ideas and everything like that. So lots of stock charts tips there as well. So anyways, I want to thank you so much for joining us today for Reflections 2020, a year in review, a special StockCharts TV event. Thank you for having me to the team. It's been fun, and thank you for all the hard work that you guys have put into making this happen. And viewers, thank you for making 2020 a great year for us. We really can't tell you how much we appreciate it. 2020 has been a huge growth year for us. Speaking about the resilience of offense and the big growth story, StockCharts TV and everything that's happened this year has been a big growth story for us. And really, that's only possible because of all of you being here, watching, following, engaging with us, talking to us, posting comments, all of that good stuff. So from all of us here at StockCharts, thank you for watching. Thank you for being a part of StockCharts TV and StockCharts.com. And I know we will see you back here very soon for another special event on StockCharts TV. Take care, everyone. Happy holidays, and chart on. Hey, Grayson Roze here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.